Elis 2020, the good, the bad and the ugly. A very thorough analysis of the Elis group from the perspective of an industry insider. Hello, my name is Christian Wurzelball. I support the textile service industry with management training, know-how in textile service 4.0 and practical hints that you can implement right away. Now something for entrepreneurs in the industry, for employees of Elis, for competitors, whomever. I have had a good response to videos that that make an analysis of the industry. So right now, a very thorough analysis of Elis. It took me a few hours. So I studied the whole annual report, the whole 79 pages and the presentation, and I listened to the presentation. And from my background, I'm about 30 years in the industry, and I've been 20 years in top management positions, so I know a little bit about it. And this is a personal analysis, of course, so don't hesitate to make comments to this video. That's YouTube, and we can take it from there. Because it's a longer video, there are timestamps in the video description, so you can skip everything and go to the summary or whatever is of your interest. So let's start with the revenue. There has been a decrease in revenue of 13.3%, and this was mainly from hospitality. So hospitality used to be about 27% of Elis in 2019, and there was about 50% decrease, and this was basically the whole impact, more or less, because the rest of the business was very resilient. So industry was down 2%, healthcare up 3%, and trade and services minus 3%. And this is also interesting because Elis represents 25% of the European market. So Elis itself has about 93% revenue in Europe. The rest is Latin America. So the impact of COVID-19 on Elis is basically very similar to the impact on the whole industry in Europe. And the share price of Elis is also very interesting. So since the crisis, shares are down about 15%, and when you take the last 3 years, it's 29%. This concerned me a lot, and I was reasoning what is the root cause of these issues, and I try to do an analysis of this in this video. So stay tuned. So a critical comment to some presentations of Elis. They say EBITDA margin is up 20 basis points. Actually, the net profit is down about 140 million from last year. So this is actually the more realistic presentation, which is good. So you would expect even a big loss in the P&L. And if they have a slight profit, then this is actually an achievement. And headline income, they report in headline income, whatever it is, of 139 million. Of course, they show the calculation in the press release, but at the end of the day, the comprehensive loss is 160 million, and you have to add to this a slight profit of 4 million, about 174 million of foreign exchange effect due to the devaluation of Latin America. So at the end of the day, it was not such a good year for Elis. Free cash flow after lease payments is up, is at 217 million and up 43 million from last year. Actually, I do not. You will see afterwards why I'm a little bit critical about the statement. The debt has been reduced by 91 million, which is actually fine because in the last year they had a slight increase in debt. So this is good, but you have to consider that they have also reduced cash by 33 million. So actually the balance is less. So if you reduce cash and reduce debt, then at the end of the day it's less than 60 million improvement. And they didn't pay dividend as well. So yeah, during the height of the crisis, they had a shutdown of 100 plants. The CEO made this actually as a good remark, that they were very effective in taking measures, which is on the one hand a good thing. So they have obviously a very good management structure where they can react very fast. So this is the good thing. But I do not believe that this has no impact in customer satisfaction. So when you look at a laundry plant and you have your defined routes, you have your agreements that you have with your customers, you have a dedicated item list of each customer. And when you shut down the plant and transfer this customer, because you have always 5, 10 or 20% of customers that are still open, and you transfer these customers to the next plant, you will always have issues there. It's next to impossible that you have no problems there. Just because you do not have many terminated customer contracts, it doesn't mean that you don't have an issue with customer satisfaction. Yeah, and the same applies to headcount adjustments. The question is whether this has a long-term effect. We'll see in the next few years. And also customer satisfaction will basically be visible in 2022 probably. So we'll see there whether there was an impact on the long term. Yeah, EBITDA, 38% of sales, which is actually a quite good number. I think, of course, higher is better, but 33.8% is a very good number in the industry. So congratulations to this. On the other hand, EBITDA is not so much. It's actually a meaningless number when you take it all together. First of all, they have an increase in restructuring cost or other expenses, non-current expenses, of 46 million. So that's 1.7% of sales. So actually the real number should be 32.1% of sales. So in reality, EBITDA is down actually. And of course, the EBITDA is just half of the story, because still you have to purchase textiles, you have to do your investments, amortize goodwill, because Elis buys many companies and you have interest and stuff. So the real question is whether this is a number where you can that you should be concerned with, or whether this is just half of the story. Then they made a statement regarding the reasons why they did so well. And on the one hand, I'm a little bit critical regarding the diversification. They are in 28 countries and 3 continents, which is fine. Although, yeah, 3 continents means also Asia, probably, with Russia. They have well-balanced end markets and 3 business lines with 100,000 items or stock keeping units. I see this critical actually, because this is an euphemism for too less focus and too much complexity, and they get this complexity due to their M&A activity. In other industries, you can buy a company and you just change everything and introduce this to the customers, and they, in some cases, like it or not. I really appreciate their management structure. They did a very good job during the crisis, and they had very strong, forceful reaction, and this helped them a lot. So I think they have a good organization. Yeah, and some other things. They are obviously quite good in cash collection, and so this is a plus. And textile investment is down, actually just 1% of revenue. So it used to be 14.3%, and now it's 13.3%. And this is probably even critical, because you should expect that if 13% of revenue are down, that you should have a greater decrease in textile investments. So I see a potential issue there. And this leads me now to one of the most important issues, which is the debt of Elis. And they have ratings, and Standard & Poor's is one of the rating agencies. And they used to have a rating of BB plus before the crisis. And then during the crisis, they lowered the rating to BB with a negative outlook, and then they took the negative outlook back, and now they are just BB. So they have now degraded to BB, which is actually where most of the non-investment grade bonds are in the European Union. So about 70% of the bonds in Europe that are non-investment grade are BB. So they are in good fellowship there. However, it is still high yield, and it's what you call junk bonds. So Elis is non-investment grade, which is important because right now the central banks are just buying investment grade debt, and so you have just private investors that invest into non-investment grade securities, and it's a very volatile market. So when you look at the European high yield bonds, and BB is 70% of this index, then you see that there is quite some volatility. And if you have a debt crisis, then you see it as a huge impact. So liquidity in the market can be a real issue. And when you have no liquidity, then of course you have very, very high yields and very, very high prices for financing. And so this was the finance crisis in 2008 and 2009. And actually, I'm not so sure about the next 1 or 2 or 3 years, how it will develop, because there is some speculation that after the government guarantees run out, you might have about 7 to 12% defaults. and there is quite some risk that the yields for junk bonds increase in future, and this has of course an issue with the refinancing of Elis, because when you look at the maturities of the debt, then this year they have to refinance about 300 million in bonds, which is no issue because they have liquidity of beyond 1 billion euros, so they wouldn't even have to refinance it. So this is basically not a big deal for them when it comes to liquidity, but still it will be interesting to see the interest rates. Sorry. That they will be able to get this year. And next year they have to refinance everything that has a maturity for 2023. Maybe even this year. So they have to extend their revolving credit facility, and they have a maturity of about 1 billion in debt next year. So this is the year after. So this year or next year they have to refinance it, and this will be quite some exercise. And then every year you have about 500 million in debt that they have to refinance. So this is quite a lot of money, and above that you have also lease liabilities. So they've started to have also operating leases, and they have a current waiver of the covenants for the debt, and this waiver expires this year in December. So actually I think this is some risk, and this might also of course be the reason for the credit rating as a junk bond, because altogether they have they have almost 3 billion euros. They have actually to refinance in the next 2 years as much as the whole current revenue. So the whole current revenue they have to refinance, and if they get interest rates that are a few percent higher, then basically every percent of higher interest is 1% less profit margin. So this is quite some risk, and they have also some risk of exchange rates, because they finance everything in euro, and about 7% of revenue are in Latin America. I have not been able to look up the number of the actually invested money in Latin America, so it's probably I would need to look at all the annual reports of the last years and see what they paid for the M&A. Their investment in Latin America has had to be depreciated, and this had a net negative effect of 173 million euros last year, which is actually 6.1% of sales. So of course it will probably not happen every year, but you never know. So when I summarize the broader picture of Elis, then of course Elis has some big strengths, and one of the main strengths I think is a market share. So market share is huge, as I mentioned already. It's 25% of the European market, and when you have such a market share, you have always the potential to be very profitable and to get good margins. So this is actually the main asset of Elis. And I think also they have a very good management structure. So they did a good job last year. And the question whether the M&A activity is a strength or a weakness, that's that's a different question. Of course, they have a very good M&A machine, so this is a strength. Whether the M&A strategy is really a good strategy, that's a different topic. And then, of course, when they resolve current weaknesses, this is a very good opportunity for the future, which leads me to the weaknesses. And one of the weaknesses that I already mentioned is their exposure to currency risk in Latin America. And they obviously have a customer churn rate. I think I make a separate video about this. I did one in German already, and I will try to update the information. I took all the revenue that they acquired through M&A in the last 6 or 7 years and compared it to the revenue increase of the last 6-7 years. And basically that's it. So the revenue increase is just what they bought from the market, from M&A. So either they were not able to get an organic growth themselves, or they had a very high customer churn rate of their of the companies that they bought. So of course this is not reported, but one thing is for sure, that they have an issue with customer churn. So this is actually a very big one. Then complexity, as I mentioned already, they have about 100,000 items on stock, and this is also a sign of lack of focus. Yeah, that's also a different story, but I think that's a big one. And then they have a flat linen process where they have no real inventory management. They're starting with inventory management right now, so this is something they intend, and they are investing now into RFID technology, which is fine and very good. But still they have quite some effort to do to introduce inventory management there. So right now you have about 46% of revenue without the crisis and 36% within the crisis, where you just buy linen and you do not know where it is. Whether this linen is at the plant, whether it's at the customer, whether it's lost, or whether it's just sitting somewhere. It's a real mess. So this is actually a big issue. They're working on it, but it's a big current issue. And then you have the value of the goodwill. In the remarks of the auditor, they said that the evaluation of the goodwill was one of the main concerns of this audit of the annual report. So if they are not able to reconcile their forecasts and have the right value of the goodwill, then they would have a big write-off. So they have more goodwill even as equity. And I remember normally banks deduct the goodwill from the equity and say this is the actual equity. So in this case, they would have even a negative equity. So at the end of the day, they are financing about 1 billion in goodwill with debt, which is quite a statement. And I don't know right now. I think they are investing enough, but I'm not sure whether they are about to make the same mistake as Berentzen itself and other companies like National Linen in the States. So this is something, a risk for the future. If they want to reduce debt, if they have to reduce debt, then they might be tempted to invest too less in the current operations, and this will then be a risk in the future for the long term. And then, of course, the big one is actually the liquidity risk or the refinancing risk, as already mentioned. So if they are downgraded, maybe to BP minus for some reason in the future, or if the market for junk bonds has an issue with liquidity, or the yield of these bonds is rising, then they will have much higher costs for financing, and this can eat up the whole profit, and even make Elis not profitable at all. So this is a big issue. They have right now 3.4 billion in debt and another 450 million in lease liabilities, and this compares to 2.8 million in revenue of last year. Of course, this was depressed, but the forecast for this year is just a 3% increase. So this year will be about 2.9 million in revenue. And they have to refinance about 2.7 million or 2.8 million until 2025. This number here includes also the operating leases that they have to repay until 2025. So this is actually the biggest risk of all. Yeah, and as mentioned here, if they are able to improve customer satisfaction, then this is basically can become even a strength. It's not so easy to cope with the complexity. This is a long-term project. Introducing inventory management takes also a few years for flat linen, and so basically they have to do quite some homework in these areas. But once they have finished the homework in 2 to 4 years, then they can have a very big potential for the future again. Yeah, so that's basically my summary for Elis. And if you like this video, then give it a thumbs up. If you didn't like it, then smash the thumbs down twice. And leave a comment. I will read the comment and also answer it, and we can start a discussion there. If you're an entrepreneur in the laundry industry, and if you're interested in a free consultation with myself, there's a link in the description to book such a consultation. I've had some very good meetings already with executives and entrepreneurs in the industry, and I think I can give a very good perspective and have some idea on how to help right now. And there is also a link to subscribe to a newsletter, and I am sending out once a week, twice a week, valuable information for the textile service industry. Okay, we see us in the next video. Bye bye.